Zscaler announced their earnings after the market closed today, and I wanted to go through their earnings report, see what they had to report, see if they're executing their business plan. This is a stock that I own. I did have a discount calculated on Zscaler. I think their growth historically has been really good, good cash flow, and the stock wasn't bid up very high. Let's get through some analysis, and I'll conclude with my valuation on Zscaler, showing if it's discounted based on the intrinsic value of their cash flows, and what I plan to do with this stock. As mentioned, I am a stockholder. I own the stock. I haven't been buying additional shares, but maybe that'll change. I'll share that with you. So, overall, the earnings were positive. In the second quarter, they grew top line revenues by 23%, which is a good growth rate. If you look at the year to date, they are growing at about that rate, 23%. What's growing faster is their free cash flows. Their free cash flows were higher than I expected by a little bit. That's great. They can grow cash flows faster. That just makes them more valuable. They guided for the rest of the year and they guided for the third quarter. And they're going to be low 20% growth for the full year, like 22% growth, which is a very good growth rate. They're becoming a fairly good sized company at $2.6 billion of revenue. Zscaler has a market cap of $30 billion, and their revenue, as mentioned, is going to get up to about $2.6 billion at the end of this fiscal year. They've become profitable, and they're very quickly becoming a reasonable PE company. They're still at a 63 for their forward PE, which is a little bit high. Analysts like the company, and they believe it's discounted by 15%. Over the past year, this stock has not rallied much. We've seen other stocks like CrowdStrike, Palo Alto really go up in value, but not Zscaler. Year to date, it's moving in the right direction, 8.89%. In after hours trading, it looks like the market did like the report that they saw. They like the revenue growth, the free cash flow, and the stock is up 4.35%. That'll be a nice add-on to the 9% that they're up so far this year. The company has very little debt, and they actually moved their long-term debt to short-term, meaning they're going to pay it off. They're going to pay off this $1.24 billion of debt because they have the cash on the balance sheet. And they're producing a lot of free cash, which I'll show in my cash forecast. When we look at the analysts that review Zscaler, 31 analysts cover the stock, and the price targets range from the bears are around $170 a share, which isn't too far lower than their current stock price, but the upside is pretty high, up to 270. That would be a very nice 25% gain if we hit that price target. They're basing it on earnings per share. And I like this part of stock analysis because it gives me the growth rates that these analysts collectively agree on. And this company is going to keep growing at 20+%. And really, in a couple of years, they're going to be a $5 billion revenue company. That looks really good. Look at their earnings per share. It is expanding fast, going from $3 a share up to almost $6 a share over the next 3.5 years. That looks great. And then their PE is going to be nice and reasonable. This growth rate is exciting. Free cash flow looks good. Earnings per share look good. So the foundation to my valuation of a company is to look at the cash flows that I expect the company is going to produce in the future. Try to forecast those cash flows as close as I can, and then being able to value all those cash flows in today's value. That's what I'm doing in this model that you're seeing. The current run rate for the first half, and they have a fiscal year that ends at the end of July, so it's kind of a little awkward, but they're halfway through their year. And for the first half times 2 plus a growth rate of 20%, I get 1.1 billion. That's what I expect they're going to produce in the year that we're in. And I'm going to grow the first 4 years collectively by 20% each year. So they're really going to be a nice cash producing company on the fourth year, producing almost $2 billion of cash each year. That really increases their value. The terminal value, which is all cash flows beyond year 4, are in the terminal value. And when I discount all that cash that I expect in the future by 8%, the discount rate, I get $52 billion of value. That is the value of all the cash flows Zscaler is going to produce. Now I add the cash on the balance sheet and take away debt to arrive at equity value. That is the net after debt value of all those free cash flows. The current market cap's 30 billion. So it's a nice discount of 79% if I compare the value of the cash flows versus the current stock price of Zscaler. The earnings per share is not quite high enough to grow into that stock price. So they're going to need to keep growing to arrive at that stock price. I combine the two, but really put more weight in the free cash flow method and a blended discount of 42% on Zscaler. So I like Zscaler. I like their growth. I like the category they're in. And I think they're an acquisition target for a larger software company. So I'm going to plan to buy more shares of Zscaler. They are executing their business plan. Their growth rate shows that more customers want their product. Existing customers are willing to buy additional products and pay for any price increases. All those things look very favorable for Zscaler. So I'm going to take my small position and put more capital to work with Zscaler and start buying into the stock. It's going to rally tomorrow, but I'm going to buy shares by dollar cost averaging into the position even deeper. Software companies are great investments. They tend to drive a lot of profit, a lot of free cash flow, and end up being very valuable. Zscaler's peers are CrowdStrike, Palo Alto, and others. And if you look at their valuations, I think fundamentally Zscaler is discounted a fair amount compared to those stocks. So that's my analysis on Zscaler, my plan with this investment. I hope you found it interesting. Just remember, I'm just an individual investor. I'm not recommending you buy, hold, or sell Zscaler, and I'm not providing any financial advice. Thank you for watching. Good luck investing.